Welcome to our deep dive into the 10 nations holding the U.S. together in 2025. Without them, America's economy, security, and daily life could unravel fast. Let's explore why. These countries collectively underpin the U.S.'s economic, military, and resource foundations. Losing them could trigger a domino effect: supply chain breakdowns, energy shortages, financial instability, and weakened defense. For example, without China and Taiwan, tech production stalls; without Canada and Saudi Arabia, energy prices soar; without Japan and Germany, debt and trade falter. The U.S. isn't self-sufficient enough in 2025 to weather all that at once. Collapse could mean economic ruin, social unrest, or even systemic failure, depending on how collapse is defined. 10. Taiwan. Taiwan's chip dominance drives the U.S. in 2025. Its factories, led by TSMC, make semiconductors for phones, cars, jets, everything tech touches. If Taiwan dropped off, U.S. production would freeze. No quick fix exists for that gap. Beyond chips, Taiwan's a trade hub. Electronics and parts flow to American shores, keeping gadgets and factories alive. Militarily, it's a Pacific flashpoint. U.S. naval presence pivots on its survival against China. Lose Taiwan, and America's Asian stance wobbles, risking wider conflict or retreat. Economically, Taiwanese investment trickles into U.S. tech, while its collapse could spike global chip prices, hammering consumers. The U.S. pushes domestic chipmaking but isn't there yet. Taiwan's role is a lifeline in 2025. Security ties run deep. Arms sales to Taipei keep U.S. defense firms busy, and its fall could embolden rivals. Trade disruptions would clog ports, delaying everything from laptops to tanks. Diplomatically, Taiwan's existence checks Beijing. Its loss might shift alliances, isolating the U.S. everyday life. New cars, gaming consoles, hinges on those tiny chips. Taiwan's small size masks its massive weight. Without it, America faces a tech dark age until alternatives catch up. 9. India. India's rise in 2025 fuels the U.S. with talent and goods. Its IT army, coders, engineers, runs American tech, from apps to cloud servers. Lose that, and Silicon Valley grinds down. Pharma's big too. Generic drugs from India stock U.S. pharmacies, keeping healthcare affordable. If India vanished, medicine shortages would hit hospitals fast. Trade ties grow. Textiles, steel, and spices flow stateside, while U.S. firms tap India's billion-plus market. Labor's another link. Indian workers fill U.S. visas, staffing hospitals, labs, and startups. Militarily, India checks China in Asia. Its collapse could tilt the Indo-Pacific, straining U.S. naval focus. Energy's emerging. Indian refineries process oil for global markets, indirectly easing U.S. pump prices. Economically, India's cheap outsourcing keeps American costs low. Think customer service or accounting. Replacing that would spike expenses, hitting profits. Diplomatically, India's voice in the global south sways UN votes, aligning with U.S. interests. Without it, America might lose leverage. The U.S. isn't ready to swap out India's role. Supply chains and skills take years to shift. Daily life, cheap meds, working apps, leans on this partnership more than most notice in 2025. 8. United Kingdom. The UK's bond with the US in 2025 is a lifeline of trust and power. Militarily, it's a NATO rock. Bases like RAF Lakenheath host US jets, and intelligence via Five Eyes keeps threats in check. Lose that, and America's global reach weakens, stretching its own spies and soldiers thin. Economically, London's financial hub trades with Wall Street, stocks, bonds, currencies, and a UK collapse would jolt US markets, from 401(k)s to bank loans. Trade flows steady too. British goods like pharma and whiskey hit US shelves, while American firms lean on UK consumers. Diplomatically, the UK amplifies US voice. Its UN seat and EU exit clout shape global rules. Without it, America might face a lonelier fight on trade or climate. Culturally, the shared language and history grease partnerships. Losing that rapport could fray ties with other allies. The UK buys US weapons, keeping defense firms humming, and its Navy patrols alongside America's. Financially, British investment pours into South real estate and tech, pull that plug, and growth slows. The US isn't set to replace this ally fast. Decades of lockstep mean a sudden break in 2025 would sting, from higher borrowing costs to a shakier West. 7. South Korea. South Korea's tech prowess powers the US in 2025. It's a chip-making titan, semiconductors from Seoul-run phones, cars, and Pentagon gear. If South Korea blinked out, US tech firms would stall, factories would idle, and defense systems could lag. Beyond chips, Korean batteries juice electric vehicles rolling off American lines, lose that, and the green push falters. Trade flows big, cars like Hyundai's and Kia's fill US roads, keeping dealerships busy. Militarily, South Korea hosts US troops, staring down North Korea and balancing China. Its collapse would yank that anchor, straining American strategy in Asia. Economically, Korean firms invest in US plants, from Georgia to California, creating jobs tied to their stability. The US leans on South Korea's innovation, think foldable screens or fast-charging tech, to stay ahead. Replacing those supply chains isn't quick. Global rivals would scoop up the slack, leaving America behind. Consumer life would shift, pricier gadgets, slower car production, while security risks grow if Pyongyang exploits the void. Diplomatically, Seoul's alignment steadies US alliances. Without it, Japan or Taiwan might waver. In 2025, South Korea's small size belies its outsized role. Its absence would ripple from Silicon Valley to the DMZ. 6. Saudi Arabia. Saudi Arabia's oil keeps the US moving in 2025. As a top crude producer, it steadies global energy markets, pumps stop there, and gas prices here soar. American refineries process Saudi oil into fuel for cars, planes, and factories. Losing that flow would choke transportation and spike costs across the board. Beyond oil, Saudi cash floods into US investments, stocks, real estate, arms deals, tying the two economies tight. If it dropped off, financial markets could shudder, hitting pensions and portfolios. Militarily, Saudi bases and alliances bolster US reach in the Middle East, checking Iran and guarding shipping lanes. A collapse would leave a gap, stretching American forces or risking chaos in a volatile region. Energy isn't just about barrels. Saudi sway in OPEC sways prices. Its absence could unleash wild swings, hammering US consumers and businesses. Trade ties extend to weapons. US firms sell jets and missiles, keeping defense jobs alive. Politically, the relationship, flaws and all, stabilizes a region key to global trade. Without it, oil routes like the Strait of Hormuz could clog. The US isn't fully weaned off foreign oil in 2025, self-sufficiency is closer but not there. From trucking food to flying troops, Saudi Arabia's role ripples through daily life, making its loss a gut punch. 5. Germany. Germany's weight in 2025 keeps the US steady through trade, security, and Europe's glue. It's a powerhouse sending cars, machinery, and chemicals stateside. Factories from Ohio to Alabama use German tools to hum. If Germany vanished, those supply lines would snap, slowing US manufacturing and hiking costs. As NATO's linchpin, Germany hosts US troops and shapes European defense. Losing it would strain American forces, especially with Russia eyeing the continent. Economically, Germany's stability anchors the EU. Its collapse could drag down the euro, rattling global markets and US exports. Trade isn't just goods. German firms invest heavily in America, creating jobs from South Carolina to Texas. The US leans on Germany's engineering, think precision parts for planes or trains, to keep industries competitive. Diplomatically, Berlin's voice aligns with Washington, smoothing transatlantic ties. Without it, Europe might fragment, complicating US influence. Energy ties matter too. Germany's shift from Russian gas indirectly shapes US LNG markets. A German meltdown would hit Wall Street, as investors flee uncertainty, and Main Street, as prices for imported gear climb. The US isn't geared to fill that gap fast. Decades of partnership mean dependence runs deep. From BMWs in driveways to bases in Bavaria, Germany's absence in 2025 would leave America scrambling. 4. Japan. Japan's quiet strength props up the US in 2025 across finance, tech, and security. It's a major buyer of US debt, holding treasury bonds that keep American borrowing cheap and the dollar steady. If Japan pulled out, markets could wobble, raising interest rates and squeezing budgets. On the tech front, Japanese firms churn out semiconductors, car parts, and machinery U.S. industries need, think robots on factory floors or chips in phones. A sudden gap would slow production, hitting everything from Detroit to Silicon Valley. Militarily, Japan hosts U.S. bases, anchoring influence in Asia against rivals. Losing that foothold would weaken America's Pacific stance, stretching its navy thin. Trade flows smoothly too, Japanese cars and electronic stock U.S. dealerships and homes, keeping consumers happy. Culturally, the alliance steadies diplomacy. Japan's collapse could unsettle allies like South Korea or Australia, leaving the U.S. more isolated. Financially, Tokyo's markets sync with Wall Street, a crash there would echo here. The U.S. relies on Japan's innovation, think hybrid tech or battery advances, to stay competitive. Replacing that partnership isn't simple, supply chains and trust took decades to build. Everyday impacts would creep in, higher car prices, slower tech rollouts, while bigger risks, like debt shocks or regional chaos, loom. In 2025, Japan's role is a backbone too critical to lose. 3. Mexico. Mexico's role in 2025 keeps the U.S. economy and food supply ticking. Just across the border, it's a hub for manufacturing, cars, electronics, and machinery roll north, feeding American industries. Companies rely on Mexican plants for affordable production, keeping costs down and profits up. Agriculture is huge too, fresh produce like avocados, tomatoes, and berries flood U.S. supermarkets, especially in winter. If Mexico dropped out, grocery prices would jump, and auto factories would idle, waiting for parts. Labor flows matter, workers cross legally and otherwise, filling jobs in construction, farming, and services that Americans often skip. Trade deals tie the nations tight, with goods zipping back and forth daily. Losing that would snarl logistics, leaving shelves and warehouses empty. Security's another angle. Mexico helps manage migration and drug flows. Its collapse could send chaos northward, straining U.S. borders. Energy ties are growing too, with pipelines linking the two. The U.S. isn't set to pivot away fast, replacing Mexico's role would take years, not months. Economically, the hit would ripple through small businesses and giants alike, from Texas to Michigan. Politically, Mexico's stability buffers the U.S. from Central American turmoil. Without it, new pressures could emerge. Everyday life, cheap tacos, new cars, built homes, leans on this neighbor more than headlines suggest in 2025. 2. Canada. Canada's proximity and resources make it a quiet but vital U.S. lifeline in 2025. Sharing a long border, the two nations trade heavily, with Canada sending oil, natural gas, and timber south to power American homes and industries. U.S. cities near the border rely on Canadian electricity, while farmers depend on fertilizers crossing over. Beyond raw materials, Canada's role in automotive supply chains keeps U.S. factories running, think parts for cars assembled stateside. If Canada disappeared, energy prices would spike, manufacturing would stall, and food production could falter. The partnership isn't just economic. Militarily, Canada anchors North American defense through NORAD, watching the Arctic and skies together. Losing that would stretch U.S. forces thin. Trade routes would clog as the U.S. scrambles to reroute imports, disrupting everything from grocery shelves to construction. Canada's stability also calms markets. Its collapse could spook investors, hitting the U.S. economy indirectly. Culturally and politically, the alignment keeps North America cohesive. Without it, the U.S. might face new border pressures or refugee flows. Self-sufficiency in energy and goods isn't there yet. Decades of integration mean Canada's absence would hit hard and fast. From heating homes to building planes, the U.S. leans on its northern neighbor more than most realize in 2025. 1. China. China's role as a manufacturing giant makes it indispensable to the U.S. in 2025. From smartphones to medical supplies, countless products rely on Chinese factories, and the U.S. imports a vast array of goods that keep its economy humming. Beyond physical items, China controls much of the world's rare earth minerals, essential for everything from batteries to defense tech. If China suddenly vanished from the picture, U.S. Industries would scramble to find alternatives, likely facing massive delays and shortages. Trade ties run deep, with American companies depending on Chinese labor and markets to stay competitive. The financial side is just as critical. China holds a significant chunk of U.S. debt, and any disruption could shake global confidence in the dollar. On the flip side, tensions exist, but the sheer volume of economic interdependence means a break would hurt both sides. Militarily, China's presence shapes U.S. strategy in Asia, and its absence could leave a power vacuum. The U.S. isn't ready to replace this relationship overnight. Years of offshoring have left it vulnerable. Everyday life, from cheap consumer goods to cutting-edge tech, would feel the strain immediately. A collapse here wouldn't just be a trade hiccup, it'd be a systemic shock, exposing how much America leans on this uneasy partnership to function in 2025.